Welcome everyone to the Gus and Dave show. Thank you for being with us today. Dave, good to see you, man.
Good to see you, man. I feel like it's been a while.
It has been a while. Look at you. You look all tan.
No, I went to
nice and toasty over there.
Went to the beach for a week and spent too much money, and now it's time to get back to it.
Get back to work.
Yeah, exactly.
For sure. We are joined by a very, very special guest today. Dave, why don't you go ahead and introduce him real quick?
It would be my pleasure. We are joined today by Drew Brand with Financial Advantage. Drew is a financial advisor, if you couldn't get that by the name of his company. Not only is Drew a financial advisor, Drew is actually my financial advisor. So you can, as far as I'm concerned, trust that anything that's coming out of his mouth is legit and is going to be accurate, and it's gonna be really good information. Because Gus, you already know, man, I'm not using anybody that's gonna be trash, you know. So we're excited to have you, Drew.
Yeah, I'm excited to be here.
Welcome to the show, Drew.
Yeah, thank you.
Thank you for being with us today. Why don't you take a couple minutes, just tell us about yourself, what you do, what you specialize in, how it all started for you, and how you got here today.
Sure, yeah. So I have been doing this with Financial Advantage and Associates for about 10 years. We are a firm that's in Rockville, local firm. I'm originally from California. I'll just tell you a little bit of my background. After I graduated from college, I was a volleyball player, so I played professional beach volleyball for about 10 years in Southern California. And after I graduated from college, my dad got me started with a little bit of money and started investing in the stock market, and really loved that, got excited about it. Made a lot of money before the .com bubble came along and thought I was going to retire when I was 30. And that didn't quite work out the way I thought it would. But I tell people that after going through all of that and experiencing that, I had a lot of I call it expensive education on all the things that you shouldn't do as an investor, and then I take that experience and now I have refined my my investment strategy and realize that there's a lot more to it than just buying what's the hottest, latest, greatest thing. And it's interesting because we're kind of in the middle of all of that right now with the way people are investing money, kind of the fear of missing out investment style right now. So
on that topic, can you elaborate on that a little bit? So what's been the trend nowadays? Like what kind of shift have you seen?
Yeah, I mean, I think it's there's some really good things and there's some not so good things. I think the good things are that there's accessibility for people, and as far as investments are concerned. You can pop onto an app and you can invest. It's super easy. It's almost too easy. It's like a video game. And so, but it's available to everyone. So that's great. On the flip side of that, people are not doing the research that they need to do in order to make sure that they can be successful. And so you really got to spend the time. You got to dig in. You got to love to do it. You got to love trying to figure out how to invest the money, how to do it well, and do it well over time. It's one thing to make money, I tell people, but it's another thing to keep the money after you start making it.
So I got to imagine that all these sites like Robinhood or whatever all these things that people can get on their phone, right? It makes it fun. It makes investing fun, but it doesn't necessarily mean there's going to be long-term growth for these people, right? I mean,
yeah, I think a lot of that has to do with that word that we hear kicked around called time horizon. It's like, how long, do you have to invest the money? And this was something that was going on back during the .com bubble too, is people were making a lot of money in a short amount of time. And so it made people really excited about it, and they thought that they could day trade. So their time horizon was really short. And when you invest like that, it is, you take the risk up exponentially. But if you have a long period of time and you have a diversified approach, a calculated approach, your probability of success goes up a lot too.
Absolutely, that's great. So this show is really designed to bring people value, as much value as possible. You mentioned about getting on an app and invest money like playing a video game. What's the biggest app out there? What do you see people are using the most, and how does that work exactly?
Well, I mean, I think the hot ticket right now, as David said, is Robinhood. That's it's getting a lot of press. It's getting a lot of people are downloading it, and then there's these, like Reddit has a lot of chat rooms or chats that are going on that are kind of giving advice on how to invest, but it's risky. The people who are giving the advice are not financial advisors. They're not beholden to the information that they're given, or that they're giving out. So that's probably the big one is Robinhood. I'll just say you can figure it out later, but in terms of like companies that are now offering 0% commissions, that makes investing a lot more attractive to a lot of people. But you don't get something for free. You're going to pay for it, and we're not going to get into the details of how that works, but it's not free.
So I think with that, right, people have so much access, and everybody's now a financial advisor, right? They can all do it. To that end, what are you seeing as maybe the biggest mistake that people are making? I mean, is it using some of these apps? Is it just not doing the research? Is it investing too late in life? I mean, what do you see as the number one mistake that people are making as it pertains to their investments?
Yeah, that's a really good question. I'd say if I was going to sum it all up into one thing, I would say it's FOMO. It's the fear of missing out. I think people are seeing all of the buzz going on around them. They're seeing, their friends telling them how they're making hundreds of thousands of dollars and how they didn't start early enough and how they don't know how to invest. And so it either is causing them to not invest at all, or it's causing them to invest in a way that is very risky and not going to get them where they ultimately want to go. I think you just have to turn off the noise, and all the radio shows, the TV shows that are out there that tell you that you should invest a certain way. They're doing that to get your attention because they want advertisers to advertise on their shows. So you just have to start as early as you can. If you're late to the game, do it anyways. Invest. It probably makes sense unless you really love this stuff to get some sort of help. But then, just to follow, just be systematic about it. Take the decision out of your day-to-day life and automate it and make it easy for yourself, and have it taken out of your paycheck through your 401k, or just have it set up so it automatically gets withdrawn out of your account.
Right. Okay. For someone that's new to investing, where would you say the best place to start is?
Yeah, someone who's, we have to talk about whether or not that person has a retirement account available to them. If they do, that's the easiest place to start. Start putting money into your 401k, your retirement account. The money gets taken right out of your paycheck, so you don't have to think about it. And a lot of companies will match what you put in as well, so that's a nice thing to have. If you don't have a retirement account available to you, then you probably talk to somebody so we can help you get that set up for yourself.
Sure. To clarify, so let's say that someone, aside from 401k or whatnot, so a lot of people are scared of going to that app and have it, automated. They would much rather have that personal connection, personal touch with a financial advisor like yourself, right? What do they need to have lined up? Do they need to have their ducks in a row before they start a conversation with someone like you, or what do they need to do to start?
Yeah, no, that's a good question too. I think it's just important to broach the conversation with a financial advisor. So you can go, obviously you can come talk to us. A lot of Financial advisors won't even talk to you if you don't have $250,000 to invest. We don't operate like that. We'll talk to anybody and try to help them, give them guidance. I think there's two parts to this equation. One is regardless of how much you make, and this might be easy to say sitting here in a studio when I don't know somebody's individual situation, but I think just to give a little bit of breakdown, you make a certain amount of money, you take a certain percentage, and that's your living expenses, and you take a certain percentage and you commit to saving it. And by doing that, if you can, obviously you don't want to get on the credit card debt trying to save money for your retirement, but you want to have a balanced approach of being able to save money for retirement. Yeah, you could talk to somebody or use your retirement account.
Do you think that people should have like I'm self-employed, my income fluctuates, right? But there's probably a lot of people where that's not the case. They get a steady check every 2 weeks or whatever their pay cycle happens to be. Do you think it's wise for people to take X percent, and I don't know what that number is, and automatically have that go into retirement or an investment portfolio, or do you think it is there more to it than that, right? I think the reason I'm asking is, you mentioned there are financial advisors that won't even talk to somebody unless they have X number of hundreds of thousands of dollars. I think that you look at like the media, for example, and it's glorified investing, and it makes it sound like you need all of this money and you're going to get rich and all of these beautiful things are going to happen in your life. And I think that may also scare people away from it because they're not in that position. They're making X number of dollars per hour, and I don't have all that money to invest. So do you think that there's let me ask I guess a different way. Is there room for everybody to get involved with some type of retirement planning or investment planning or something like that, regardless of what their income level happens to be?
Absolutely. Yeah. There's people who make hundreds of thousands of dollars a year that have no savings to show for it. And there are people who make, just use a number, $50,000 a year and have plenty of money, plenty of savings. Yeah. It's just a matter of not living beyond your means.
That's no fun.
Yeah. Yeah. Well, that's a big challenge. It's easier said than done. And I don't sit here and things happen to people and they go through tough times. And so I'm not sitting here judging anybody who's struggling financially, but I think it's important to sit down. If you don't like doing it, you're not willing to do it yourself, then sit down with somebody and really crunch the numbers on what it's going to take to get it done. But it doesn't have to be hundreds of thousands of dollars to start. The earlier you start, the more bang you're going to get for your buck. Compound interest is, as Albert Einstein said, the eighth wonder of the world. So it is very powerful if you start early, but if it doesn't, it's never too late to start. So
it's interesting. I think that, you look at kids, teenagers, people in their 20s, Lord knows I was probably worse than like this. You want the video game or you want the new clothes or the new shoes or whatever it is. And, you don't necessarily need that stuff, but it looks cool and it feels good. And, if you've taken that money and invested it and let that compound interest take over, you'd be buying all the shoes and gear and everything else that you wanted in the future. It's interesting though. I feel like you and I have had this conversation to that end. It's all about balance also, right? Because you want to save as much as you can for retirement or, whatever your circumstance is going to be. But at the same time, like you don't know what's going to happen tomorrow, right? So you want to be able to enjoy today at the same time. So it's interesting. There's that balance.
True.
Well, and I think that also when you are coming up with, I'll say it, the B word, when you're coming up with a budget, not that B word, David, that it's important to cook into the whole pie apart for fun. You've got to make that part of your budget. Otherwise, you're just not going to stick to your budget. And by building a budget, it allows you to put this percentage is going to go towards savings. This percentage is going to go towards fun. This is going to be my regular expenses. So it allows you to be more successful, I think, in most cases, if you're willing to, if you set it up in a way that's you can do for a long time.
So speaking of savings, right, you mentioned a savings account and what you were just talking about just there. Should people have a certain amount in savings before they start investing, or is it something they should kind of do simultaneously? Right? I always heard you need 3 months or 6 months of living expenses before you should be focused on your investment portfolio or your retirement account or whatever the case may be, in case, God forbid, there's an emergency or your car breaks down, whatever the case, right? So is there any truth to that, or should we?
Yeah. So you brought up that, and then also, like, if you're in debt, right, you should have an emergency fund. Typically, we're recommending that you have between 3 and 6 months worth of expenses set aside in a plain old boring bank account that's there when your car breaks down or when your HVAC goes out. But beyond that, even before that, let's back up a little bit. Some people are asking the question, should I be paying off credit card debt or should I be saving? What's the balance? Or, student loan debt. That's a huge thing that people are struggling with. I think there is some balance there. I am going to say, I'm going to be maybe controversial. Some financial advisors might not say this, but I would say focus on getting out of credit card debt if you have credit card debt, because you've become a really good investment for the credit card company at 14 to 25% interest, right? So that should be your first focus. Once you've done that, then I think you can save for your emergency fund and invest for your retirement at the same time.
That's awesome, Drew. So we touched on 401ks and retirements quite a bit. What other things can people invest in?
Well, it's a long list. And when I talk to people about, I teach a retirement planning class, and we talk about, when they get to retirement, the more different types of asset classes that they have, the better. So you can have a traditional 401k. You can have a Roth 401k, you can have a Roth IRA, you can have a traditional IRA, you can even use some forms of permanent life insurance. We're here today to talk a little bit about home ownership too. That's another place where you can build equity, you can build savings, you can build value. It's an appreciating asset.
It's funny you mentioned. I'm just kidding.
had to feed into that at some point.
Yeah. No, I'm actually glad that we're touching on this, because obviously we do home improvement here, and you're in the the real estate market and industry. So let's talk about buying homes. When is the perfect time to buy a home, or is it, and why should? Or FHA versus conventional, real quick. And I know, I'm sure, Dave, you can speak a lot to that topic, but I want to hear Drew's perspective on this.
Yeah, I don't know if there is, to answer that question, I don't know if I can answer that question, the perfect time to buy a home. I think that, again, it goes back to the philosophy of living within your means, right? And if I'm working with somebody and we're trying to figure out whether or not it's the right time to buy a home, we're talking about what's the rental market like? How much money do they have? How much money can they afford to put down? What are current interest rates? How long are they planning to live in the area? So, and I'm sure Dave has a more exhaustive list than that of things you should be thinking about.
So in terms of the perfect time, right? Buying a house is an appreciating asset. Yes, it is shown to grow in value over time. Yes, there's going to be dips in the market, just like with the stock market, right? So what I tell people in that regard, you buy a home because it's where you want to live, not because of the investment potential. The investment potential is there, but in most markets, if you think you're going to buy a house and turn it around for profit in a year, you're probably smoking something, right? It's a long-term type of thing. So you
probably
want to buy
people
something
out there that are better at it than you.
What, smoking something?
Well, that's a separate subject, but yeah, that too.
No, I mean, look, there are real estate investors out there, right? I mean, there are people who do that for a living, but the average everyday person, that's not what they're doing, right? If you're going to buy a house, you buy a house because it's a comfortable place for you to live. Maybe you're raising a family. Maybe it's your first place and it's a bachelor or bachelorette pad. Whatever the case may be, you're probably not buying it because of the investment potential. That just happens to be like an added bonus.
Right.
Right?
Right. Let's talk about mortgage payments. Should people double on their mortgage payments, or should they invest that money?
Yeah, that is a good question. And I think that also depends on current interest rates. What are you investing that in? If you're investing in the stock market, are you putting that in? Because you have a lot of options when it comes to how you're saving your money, right? You can put it into your retirement account, you can up your 401k contribution, you can put it into a brokerage account where you have easier access to it. It really depends on the person. I lean towards the side of paying your mortgage as you go, especially if you got a really good interest rate, and not, if you want to make an extra payment, that's great. If you make a lot of money and you can pay it down, but you're basically leveraging somebody else's money so that you can use your money to invest in something that, historically speaking anyway, has given you a return of about 8 or 9% on your, maybe even 10% on your investment. So, if you're paying, let's do the simple math, even if you're paying 3% interest on that money, you're coming ahead through about 6%. Now, I will say that I've had some mortgage brokers come to me and say, why wouldn't you advise your clients to take money out of their mortgage, or do either a home equity line of credit or refinance and take the money and invest that money in the stock market? And that's, in my opinion, that's taking on an awful lot of risk, because if your financial situation goes south, or the stock market doesn't do what you thought it was going to do in that or shorter period of time, or even over a longer period of time, you're taking on an awful lot of risk. So I don't advise that.
Would there be is there something to be said for maybe taking a portion, right? Like I think that, these mortgage brokers, maybe they're implying that clients should be doing a cash out refi or a home equity line and putting all of that money in, right? But let's say I've got 200 grand worth of equity. Would it make sense for me to take out 10 or 20 grand versus all of it, and play with that risk a little bit? Because then I still have equity in my home. I don't take it all out, so in case I need it, but then I can play that market a little bit. Is there...
maybe I'm just old fashioned.
I put him on the spot, didn't I?
I would say, David, sell 2 or 3 more houses and then invest that money instead of take it out of your house.
Yeah.
It's really nice.
If you met my wife, I'm not doing that anyway.
There's no chance in the world that you're going to be able to do that. I know your wife. But, I think that there are better options. And one of the mistakes that I made early on is I borrowed money to invest it, and it burned me really badly. So that's why I stay away from that, and I advise other people to stay away from it.
It's one thing to invest in the stock market, and I understand the huge risk that people will be taking. What about taking that money and putting in a down payment on another property? Would that make sense? And that's for both of you.
Again, I think it all comes down to risk. Right? How comfortable are you with risk? What percentage of your overall net worth is that? How is that going to affect? If there was, let me just put it this way. When you're planning, you don't want to plan, things have to be successful. The best case scenario is the only way you're going to be successful. If you don't understand what I'm meaning? What I mean is that a lot of people, especially when I'll just use this as an example. When they're buying a house at the absolute tippity top of where they can afford to buy a house. If something goes wrong, anything goes wrong in their financial situation, they're in bad shape. And so in the same way, like making that decision to take equity out of your house in order to buy a rental property, what I think if you have some success with that strategy, it becomes kind of addictive, and you start doing it more and more till you leverage yourself down to a very risky place. Now, if you have a lot of discipline, you're experienced, you do that, and your balance sheet, your personal balance sheet still looks great, then let's have that conversation. But in general, I think it's nice if you can to have your mortgage paid off in retirement.
Okay, well, since we deal with a lot of homeowners, another question for you is: does it make sense to take a HELOC and renovate or remodel your home? or invested, or is that considered an investment in your home? Let's say a kitchen remodel.
So I think this comes down. David can speak to this as well. I think that again, leveraging somebody else's money in order to. Most people don't have $50,000 or $100,000 laying around to pay for home improvement, right? So most people need to take out some sort of HELOC, whatever the loan is, personal line of credit, in order to pay for that. So I'm not going to say that that's a bad idea, because that's most of our situations.
Got it. Okay.
And in terms of, look, in terms of doing that, it's not necessarily like an investment standpoint for like selling your house or renting your house out. Sometimes you've been in your house, 5, 10, 20 years and your appliances are outdated and it's time for a kitchen remodel, right? Some of that is just protecting your own asset, right?
Sure.
I mean, you gotta keep up with maintenance and keep up with, certainly it doesn't mean you need a top of the line quartz countertop, but maybe you need something new because things are starting to deteriorate just due to wear and tear and age. That question, Gus, I think has less to do with like a long-term money-making investment and more to do with people's own personal circumstances and maybe even their own personal preferences as well.
Sure.
Yeah, I think that's true. That's very true. It's not, because you might have the idea that, I'm going to redo my kitchen and it's going to be amazing. It's going to increase the value of my home. And then it turns out that you have really bad taste. Right. And no one else likes your style. So you made it harder to sell your house than before. But if that's going to make you happy, you're going to be there for a while and just enjoy it then. And I'm not saying don't remodel your kitchen. I'm just saying that for doing it for the purposes of bringing value to your home isn't always going to work out that way. It should be mostly for your own enjoyment.
The way we live 100%. And the way we sell are two different things, right? If you're doing it to sell, you want to have a conversation first. If you're doing it for your own personal enjoyment and satisfaction,
that's completely different.
Have at it.
Exactly. That's right. That's a good point.
For sure. All right, guys. For the interest of time, we're going to close soon. Drew, what else would you like to add on that topic? What else? Is there anything else you'd like to share with the listeners?
Yeah, I think that I've learned over time that this is not a revelatory paragraph that I'm going to say in the next second, but it just the slow and steady wins the game. I know it's boring. I know it's not flashy. But the bottom line is I've just found that, doing things systematically over time, making good decisions over time, there's no such thing as a quick and easy way to make your $1 million or whatever you want to call it. You just have to, it's a slog. And, I'm sorry, I don't have anything super exciting.
That's a great advice, actually. I couldn't agree with that more.
I'll tell you what I heard, right? In this world of instant gratification, sit down, slow down, take your time. And if you have somebody that can help you like Drew, then you know what, God willing, you'll do okay.
Absolutely. So Drew, lastly, how can people reach you?
Yeah, so our office is in Rockville, Financial Advantage and Associates. The best number, call me on my office number, 301-610-0071. Be happy to talk to you. Happy to point you in the right direction if I can't help you. And
we can drop his info in the details, right?
Absolutely. Yeah. We'll drop your email down in the description below. Dave, is there anything else you'd like to add?
No, Drew, this is great, man. I really appreciate it. Like I said at the beginning, I mean, I use Drew personally. Me and my wife, we use Drew, and it's been great, man. Just the advice and the guidance, and I'm not one of these that's got $250,000 to invest, and he has treated me as if I do have $250,000 to invest. So it's been fantastic. I really appreciate it, man.
Yeah, that makes a huge difference. Drew, once again, thank you for being with us today. We really appreciate it.
Yeah, it was my pleasure.
All right, guys, there it is. If you guys have any questions, anything that you'd like to share or ask Drew, leave them in the comments down below, and we'll be happy to answer them for you. Until next time, thank you. We'll see you again.
See you soon.
See ya.